Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our new podcast series. Online, we've got Mark Selby, who's the CEO of RNC Minerals. Good morning, Mark. How are you?
Good morning, Matthew. How are you?
Very well. Thanks for joining us. We're making this a habit now. We spoke last
week. We've got lots of news happening. So
fantastic. Well, you did say that you were going to be providing more news more often. So, that's great. Now, you've got a press release that's come out today talking about Dumont.
Yeah, that's correct.
So, it's been sort of taking the back seat to Beta Hunt for a while. Yeah. But why don't you talk us through what is in that feasibility study and why investors should be excited?
Sure. Yeah. I mean, obviously, again, we're in the very fortunate position to be a junior company with two great assets. One, the most exciting gold discovery at Beta Hunt, and now, with Dumont, the feasibility study basically confirms, where we were before. This is, over $900 million US NAV. It'll be one of the largest base metal mines in Canada, up there with Highland Valley, and which is Teck's big copper mine in Canada, or Voisey's Bay. It'll be one of the largest nickel sulfide operations globally, just behind Norilsk's massive Russian operations, Jinchuan's Chinese operations, and then Dumont now will be comparable in size to where Sudbury's operating today in terms of nickel output. And then, most importantly, with today's market, it is one of the largest battery metal projects that's ready to go to be able to meet the needs of the demand coming from electric vehicles.
Fantastic. So now there was a feasibility study done in 2013, and I think you then also did a 2015 EPC report. Because obviously people have been waiting for this Dumont update. They're very excited to kind of see what we've got. I think everyone's got a sense of the scale of it, which is great. But why did you go through that process? What did you need to discover?
Sure. The key thing was, we had done the feasibility study in 2013, but the fundamental change really is around the macro assumptions. The Canadian dollar is no longer 95 cents to the US dollar. It's down at 75 cents. Nickel prices, weren't at the level, aren't $9 right now. So, we updated the price deck, we updated the currency deck. And then the key piece that we added on was the roasting path to market. We had worked, if you go through our news flow through 2011, 2014, 15, worked with Tsingshan, who's now the largest stainless producer and largest nickel producer in the world, to demonstrate that roasting nickel concentrate is a very low cost, high value way to get nickel units into the stainless steel chain. So that's what we've incorporated into the feasibility study there. So
in terms of value creation for the business, what are the key outputs? What has this new feasibility study told you, which you didn't already know in terms of the economics?
Yeah, the key piece is the really demonstrating for Dumont the value of concentrate roasting as a path to market, and then updating the macro environment in terms of currency, oil prices, and metal prices for where we are now versus where we were in 2013. And the nice thing is, it's a low second quartile cash cost producer. We're actually under $3 a pound or $6,600 a ton cash cost through the first phase of operation. We're under $4 on an all-in sustaining cash cost basis across the life of the project. And I think you'll find very few nickel operations that have that kind of all-in sustaining cash costs. And so, we're very, very happy, with, having something that's a very long life, low cost, very robust mining operation.
So tell us about some of this, because I'm looking at the release, and it talks about electrification of the mine, incorporating trolley assist. It talks about obviously the concentrate roasting, conversion of FerroNickel, etc. Can you talk specifically to some of those components, if you don't mind?
Sure. Yeah. In terms of trolley, this is something we looked at in 2013. And the pit design at the time wasn't optimal for it. So we've now optimized we've tweaked the mine design so that it's better set up to use trolley. And so what trolley does is basically, you just like a streetcar has overhead wires that allows you to drive a truck up a ramp on electricity, and allows the trucks to go up much faster.
Yeah.
And you obviously don't use nearly as much diesel which generates a lot less CO2 emissions. So
right.
We're very fortunate to be in Quebec, where the power rates there are roughly just over 3 cents US a kilowatt hour, which are among the most competitive power rates globally. And so, it makes sense to try and take advantage of as much power as we can in the region.
Fantastic. And then the conversion to ferronickel, that whole process was...
Because
basically, again, the piece here says it just kind of gives you options as to what you want to do rather than actually giving you a definitive answer.
Yeah, one of the difficulty with nickel sulfide operations globally is that it's been a pretty almost oligopolistic market in terms of the smelt. There's basically a half a dozen smelters that treat nickel concentrates, and the pricing for those has been very much in favor of the smelters and not so much in favor of the miners. And so we came up with this path to market that once we roast off the sulfur, which is done in lots of different operations globally, it looks like a high grade laterite ore feed. So we can then go to any nickel pig iron plant, any ferronickel smelter, and we work with several of the largest stainless steel companies back in 2014, 15 to prove it could go directly into their flow sheet. So with more options and with a much lower cost path to market, we increase the value very dramatically in terms of what we get paid for the concentrate.
Right, and I guess that means that whoever you're looking for a strategic partner to come in here, that kind of gives them information, which I guess they make a decision based on what's going on in the market at that time.
Yeah, exactly. And the nice thing is we have complete flexibility in terms of, right now that path to market just pays for the nickel. It doesn't pay for the cobalt and PGMs, but those cobalt and PGMs are in the concentrate. So if somebody wants the value of those, or if the market price is high enough, or we in an area where the content of that cobalt or PGMs is high enough, we can easily send that concentrate to a smelter to recover that cobalt or palladium and platinum.
Yeah, so lots of optionality there, which I guess is exciting, and I think again in the release there's some numbers which you put against that, which people should look at. You also talk about employing smaller, more maneuverable equipment in terms of reducing the overburden. That's an interesting thought.
Yeah. One of the key pieces, again, with as we went through all the various feasibility studies that we've done on the project, was really about making a much more reliable to construct and reliable to operate mining operation. We have the intent, we'll sell it to the right person, but we, are also positioning it to be able to build it ourselves. So we want to make sure it starts up properly and ramps up properly. And so, one of the things that we've done as we've gone through, through this engineering study is look for ways to eliminate some of that risk. So by starting with a smaller footprint, by having two pieces of equipment rather than one larger one operating, it just gives you that much more flexibility to make sure you can deal with unforeseen issues that always pop up.
Right. And again, just going to finish off the two points which you make. Tailings storage facility design improvements. So that is again quite a hot topic at the moment. But you've looked at optimizing that as well, have you?
Yeah, no, what we did there is, again, the project's fully permitted. We have permitted tailings design there. Again, we're just looking for ways to do things better. So we just have a new tailings design that's easier and simpler to construct, and then, basically results in less water being, not as high off the ground, which is what ultimately causes issues. So we had a good design before. We think we have an even better design now.
Right. Okay. And then you kept the mining rate the same, like twice the capacity of the mill. I guess that's for obvious reasons.
Yeah, no. We basically put the highest grade, highest recovery material through the mill first, and then stockpile the lower grade, lower recovery material. It has a couple benefits. One, obviously, it brings forward cash flow.
Yeah.
Two, having stockpiles of material allow you to deal with, again, issues that may pop up at the mine or the mill and so forth. So it gives you a lot more operating flexibility to have that stockpile that you can then work with.
Right. Okay. And so generally, I guess this is an optimizing process you've been through, and you've looked at the project design, risk mitigation, operational liabilities, and the usual how do we save money throughout. Yeah. But you've also got a couple of things in there three things which kind of caught my eye. around the automating of the fleet, an additional operational scenario, and potential sale of magnetite, and you've put some numbers there. So, but they're not in the base case as it says here. So why have you done that?
Yeah, so there are different things that we weren't able to get to a full feasibility study level, and again, we were very keen to make sure we sort of stayed focused on the scope that we defined in 2015.
Yeah.
But there are a number of things that have emerged in the market that we think can add real value to the project. I think combined was almost $300 million more NAV. So first off, the easiest one is in terms of with a magnetite concentrate, we have magnetite in our ore body. We have effectively now a stream that goes out to tailings that contains a significant amount of iron, and at the right price, it adds a significant amount of value. So that's something we're going to continue to look at. The second thing is in terms of autonomous trucks. Those are rapidly becoming sort of the standard in a lot of large open pits. They're not quite there yet, so we didn't want to put that in the base case, per se, but as the project moves forward, that is a real option for us, and that's something that we're definitely exploring further. And then the third piece is really around, in our discussions with various battery market participants, they want a lot more nickel sooner. That's something that comes through loud and clear. So in order to address that, we've looked at options of producing, significantly more nickel upfront, with not too much incremental capex. And again, that's an option that, with the right partner, we could move forward on quite quickly.
Well, that's really interesting. I guess it gives people, like investors like us, a sort of sight of what the future could look like without it necessarily being in this feasibility study. So thanks for that. We'll probably do some work on that and come back to you with some questions if we may. Can I just talk about the overall project? Obviously, you're looking for a partner. You've been very, very clear about that now you're at a point where obviously you're saying it's fully funded through to this point. You're going to have discussions or continue discussions with strategic partners. And by strategic, you mean operating partners. They will operate this and pay for it.
Yeah, well, more importantly, they'll pay for it. We can build the operating team to operate the asset. Again, if it's somebody who has more operating expertise than we do, they're more than glad to work with them. We did that with our Reed mine with Hudbay, but we're building the team to build and operate it if we need to. But it's really around a funding partner. Again, we want to put this forward with the least dilution possible to RNC shareholders. And again, it's not uncommon with projects at the scale to be able to bring somebody in where the capital requirement for the current project owners is relatively de minimis.
So talking of that, what does a JV like this typically look like? I know you can't get into it. Early stage discussions, but give us a sense of what the RNC shareholders could end up with.
Yeah, no, there's typically there's what I sort of call the more Asian project model, where you have an Asian off-taker. They own anywhere between 20 and 40% of the project. Typically their buy-in premium helps fund a big chunk of the required equity for the entire project, and then they bring access to lower cost Asian debt alongside it. You can, again, that's sort of one bucket. There's a second bucket where you have large mining companies who may want anywhere from 50% to 100% of the asset. And again, I think what's encouraging there is there was news last week that BHP said they're going to keep their Nickel West business. They see significant optionality and upside given the growth that's happening in the EV space. Glencore put out a great presentation the week before last. The conference really sort of spelling out what that nickel growth looks like. So, and we have had talks with, various companies in the past, and we've all been waiting for the right nickel market, which I think we're now getting into to be able to advance this further.
Well, I think that's true. I'm just looking at the LME numbers. They're forecast to grow. They're suggesting in 2030 nickel prices will be at 23,000, which would be quite a nice day for everyone if that happens.
Very much.
So, do those sorts of numbers affect your thinking in terms of, clearly you've got $1 billion worth of capex, so you're not going to do that. you're going to bring a partner in, but I guess that goes towards your negotiations with them as the price rises in terms of what percentage you get.
Yeah, no, at the end of the day, I mean, we've got our 28% interest today, and as the operator, again, we want to keep as much of that as possible through the process. And there are a number of paths that allow us to have, be able to keep that entirely. I think, from our perspective, we're in a position where the nickel market is really set to improve, quite structurally improve. It's in great place right now. We've went multi-year deficits. I think we're going to continue to get that through the next several years here. And so, I think, and when nickel markets turn, they tend to turn very quickly. So, obviously, as nickel starts to realize its potential, the value of Dumont's only going to climb from here. And you can see in the feasibility study results what kind of leverage we have to the nickel price.
Yeah, I think our reading of this suggests that people should be quite pleased with this feasibility. Well, are you pleased with this feasibility study?
Oh no, extremely pleased. Like, this is, there are very few $billion NAV projects in low-risk jurisdictions sitting in a pile of infrastructure that are fully permitted and ready to go today. So, and you see.
Okay, and just again, just help me on some numbers here, Mark.
Sure.
So, how much has been spent by you on Dumont to date, and as part of your negotiations, do you get to recover that earlier, or is that just part of you recoup that over the period of the term of the agreement?
Yeah, we just recoup that over the period of the investment.
Right, okay.
Again, in this the development stage markets we've been in, that's what you've paid in is you've paid in, but it's really about focused on the value going forward. And again, having $1 billion project value is helps make sure that we'll more than get our monies back on it. So.
Right. Do you mind if we just park Dumont? Congratulations, by the way. Great announcement. Can I just ask you a few questions on its the sister company or sister asset, Beta Hunt?
Yeah.
If you don't mind. So, and I want to talk specifically about the drilling there. Okay. Now, obviously, in the resource estimate, you've used 35,000 meters worth of drilling, but there's plans for additional drilling to, as I understand it from our previous conversation, to get a sort of sense of what these shares are doing. Can you just talk to that a little bit? Because
sure.
Yeah.
Yeah, we're doing a 40,000 meter campaign. 35,000 meters was focused on really just expanding and upgrading the resource that we have.
Yep.
We're taking the final 5,000 meters and really focused on those meters on showing investors the scale of the exploration potential that's there. Again, we believe we have 4 separate shears. There's over 4 kilometers of strike length that have been indicated, within the first 10 meters of these shears from the historic nickel drilling. So we, in terms of, highlighting some of the strike and some of the depth potential of this resource is what we're going to be targeting through the final phase of the drilling program.
Well, that's interesting. So, talk to me about that. So, there's going to be some drilling at depth, is there? And what? And if so, why?
Yeah, no. The key is again, as I said, we think there's 4 shears with at least 4 kilometer strike length, and given the geology there, we think these structures continue for a significant distance, and so. We've really focused our drilling on a tiny fraction of that overall potential to date. So, it's really sort of highlighting the fact, well, okay, if we're getting, this much, resource in 10 to 15% of that overall potential, what could it look like if we find more, more gold in more places to be able to take that same amount of resource and extrapolate it over a much, much larger set of structures.
Right, and so tell me about that. So you've obviously got 35,000 meters done. Where is this 5,000 meters going to be drilled? Are you going to do a lot of infilling, step out, etc.? But where specifically? Is it anywhere near the farthest day vein?
Yeah, no, we'll be targeting the sediment horizon. Along the shears or on some of the other shears, just to see if again, we believe it will be there, and just to highlight the fact that we do see it, and again, the bulk of it is more just to show what that base resource looks like,
right, and
how it can extend well beyond where the very relatively small area that we focus most of the drilling to date.
Right. So there's no. So I'm not quite sure. Is there a plan to look around the Father's Day vein, obviously where you had that, magnificent find, and try and identify that, or do these shares, sit elsewhere?
The Father's Day vein is one very small piece of where the sediment and shear intersect. Where we're hoping to show that exists in a bunch of other places in the mine.
Right. Okay. Interesting. Okay. Well, I guess as that develops, you'll tell that story. So, I appreciate your time.
Yeah.
Just quickly on Higginsville, obviously, I think thank you very much for last week for clearing up, the thinking and the logic behind that. And I guess it's early days, but, have your team looked at the data around how they're going to develop the exploration component of that?
Right now, we've been really focused just on near-term production there, which will be coming from the Blue Pit. That's, again, I think a lot of the option value that's there is, that's a massive land package in one of the great gold producing regions, which hasn't seen much exploration for the last few years. So, obviously right now the focus on exploration will be Beta Hunt. But, we've just purchased a massive amount of optionality with that Higginsville land package. And that's something that we'll sort through once we've, got the integration done and make sure that's executing well. And then we'll start to explore that optionality on a pace that makes sense.
Right. So two things there. I guess you mentioned last time that Blue had a sort of softer rock, which in terms of, feeding into Higginsville could actually be quite beneficial to you. Is that beneficial in terms of another means of reducing the ASIC, which again we talked about last week?
Yeah, for sure. Because the feed for most of the last period of time has been, very hard ore that's 85 kilometers away that achieves, much lower recoveries than what we get with Beta Hunt. Blue is softer; it's only 10 kilometers away, and gets recovers similarly to the kind of recoveries that we get at Beta Hunt. Right.
Okay. That's interesting. So again, that more needs to come out about that as and when you work that out.
Exactly.
But one big question which kind of people have been asking, and we're interested in, and I should have asked before, which was the mill itself is 1.3 million tons per annum. Any thoughts about upgrading that, increasing that? Are you able to do that?
Yeah, no, they were, Westgold was actually looking at scenarios where they could expand that mill further to feed it with lower grade ore from some of the other mines on their property. So yeah, no, they've actually done a bunch of work to show that mill can be expanded, by another 20 or 30%. So again, as we go forward here, if we have resource that's profitable to put through that mill, that's an option that we'll look at some point in the future.
Right. So another 20, 30%. Okay. So you could be potentially getting up towards the 2 million mark potentially.
Yeah.
Okay. But more work to be done before you make that decision.
Oh yeah.
Okay.
Yeah, most definitely.
Okay. And then a part of that is working out if you're enough to feed that mill and keep that going. Okay. And again, one final point with regards to funding of Beta Hunt. Royalty streaming, which you've done with Dumont, is that part of the equation, or is that part of the thinking for Beta Hunt?
No, Beta Hunt already has a fairly hefty royalty on it. So yeah, that's not an option that we would look at with Beta Hunt going forward.
Okay, that's fantastic, Mark. Appreciate it. It's early. I know you've got quite a big day ahead of you, so thank you very much for updating us. We look forward to speaking to you again, and you continue this, talking to the market, giving us guidance is much appreciated. Thank you.
All right, thank you, Matthew. Take care. Have a good day.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.